Okay. All right, so today's trade review. I had a... Was that really a lower day zone? Oh shit, it was. So pre-market, let's use the 5 minute since it is easier. So pre-market, we actually gapped down. We were trading in between the lower day zone from Friday and the lower day zone from Thursday. And we opened up in between those two levels. So typically, what I would like to do is wait for price to either break below or break above and see how price reacts to it. We didn't get anything off of open until we had this huge drop, which broke below this lower day zone and stopped at 435.03 in that area. So with that in mind, I wanted to see where price went and did after that. I really wanted to see, I wanted to test puts when price started coming back up to the bottom of the lower day zone. And usually what happens is price will retrace back and test a level that, or a zone that we broke. So on the 2 minute, we actually broke the bottom of the lower day zone, but we weren't able to trade within it. We couldn't break it and hold in it. So to me, that showed weakness. Now, in hindsight, the volume wasn't really there for me to enter puts. And especially since we were creating higher highs and higher lows within this swing, especially on the 5 minute too. Puts wasn't really that great of a trade to take, but because of my risk to reward being so tight, the stop loss being so tight as a part of the strategy, which is the same as Hirsch's. So I entered 435 puts, and this wasn't really to test for us to drop down to the next lower day zone. It was more so a test to see if we could go and clear lower day again and maybe create a lower low. So my first price target was actually the bottom of the a green candle that started this first swing high. And then my second target was going to be the low of day. It never got there. We chopped around for quite a bit. What is this like? Fuck. 2, 4, 6, 8, 10, 12, 14, 16, 20 minutes we chopped around in this range. And finally, which is a part of the strategy, we broke and closed above the 13 EMA. So I closed my position. It was only a 10-cent loss, which is tremendous because the risk to reward there. Let me do this. Where is it? Here we go. So really, the risk to reward is a 10.22 ratio, right? Even if I had my stop set just above the lower day zone, it's still a 3 risk to reward ratio, which is good. So I closed that position out. The volume wasn't in our favor in any of this. Even on the 5 minute, you could see that the selling volume was decreasing, and when we had dipped lower, about like the 435 area, buyers really started stepping in each time and kept price above. So with that in mind, when we came back and actually tested the bottom of the lower day zone again, right? And I could have waited again because volume wasn't really on my side on the candle that I had entered on. Even the 5 minute wasn't that strong. But I tested calls anyway, thinking that I kind of figured we were going to swing back down, which I didn't take into consideration when I entered the position because I figured, honestly, if we were going to keep continuing to create higher lows while we're maintaining this 436.40 level, they're probably going to do a little bit of a liquidity sweep, which they cleared the low of the recent swing low. So I really should have set in order to have it purchased by there. Um, and again, with the strategy, we failed to break above this resistance, and the price came back down and closed below the 13 EMA, all out of the position there. This was another very, very small loss. My entry was 30 cents, and I closed out for 25 cents. So it was only a 5-cent loss. Then now price started actually, we started bull flagging back, um, and we finally broke the lower day zone, the bottom of it. Then we actually broke this resistance that had gotten rejected 3 times. And now that resistance, price came back down and it actually acted as a support. So price actually pushed up way above the lower day zone top, right? Came into this liquidity area that was formed on the 2 minute from that initial buy up and then complete sell off. And once it cleared into this little supply zone, it bull flagged back down to the bottom of it, and that is where I entered. My price targets were, this is shown better on the 5 minute. My price target was the top of this zone, the top wick of this candle, and then I was going to sell into strength if we broke into this top zone, which was the initial high a day. So we actually broke into this. I sold one contract into strength. That contract I sold at $1.14. Price came back down. It held within that zone and then pushed up and actually went into that my price target. I sold into strength there right when the candle hit. I sold it only because I'm playing 2 contracts. So at that point, I kind of just wanted to secure profits. What I could have done was had a trailing stop that moved my stop loss probably at 437.32 and let it breathe a little more. But because of how price action was, I was like, you know what? I'm cool with taking a dub. That was almost a 100% play. So it was a very nice trade. I was really happy with it. It made up for both of my losses, and I ended up 12% on the account today. So, and then I called it after that. I'm really trying to only take 2 to 3 trades a day, depending on the setups. Even after the fact, price respected this high a day zone right here, rejected it, then it bounced off the zone that supply zone that was created on the 2 minute, and that was it. So like I had posted, keeping your losses small, learning how to cut them, being okay with cutting them, not letting it get to your head, don't let your ego get in the way, and holding positions longer than you need to. There will always be another opportunity in the day for you to take a trade. You're not married to the trade that you take, you know what I mean? So I hope that this was some sort of help, and I hope that this gives some insight onto my trading strategy for options, since I haven't uploaded a video yet on it. But tomorrow's another day, and let's fucking get it. Peace out, y'all.